In this video, I'll walk you through the important components of an income statement to prepare you for using the financial statement in your investing journey. The income statement shows all revenues, expenses, and net income over a given period of time, normally quarterly or yearly. There are basically 9 broad components of an income statement as shown on this slide. I will use the income statement for Apple from the stockanalysis.com financial portal to walk you through these components. You can also get this information directly from Apple's annual report, but it is more convenient to get the data from stockanalysis.com. After accessing the stockanalysis.com portal, enter Apple's stock symbol, AAPL, in the dialog box. Click Financials on the main menu and then the Income Statement submenu. This submenu shows the income statement for Apple. The data is from Apple's annual reports over several years. Stockanalysis.com normally provides up to 10 years of a company's income statement, whereas the typical annual report only provides 2 or 3 years' worth of income statement data. The Apple income statement here is for a 10-year period. Note that the top of the income statement shows the currency in which the data was prepared and the fiscal year of the company. The top of the income statement also shows the period for which the income statement is prepared, annual or quarterly, because companies that issue stock are required to file financial statements every 3 months. A quarterly income statement is necessary. A beginning investor would probably just need the annual income statement for his or her analysis. One important thing you should know about any income statement is the unit of measure used in creating it. In this case, you see that the unit of measure is in millions. This means that any number you see in this income statement should be multiplied by 1 million unless otherwise specified. For example, if you see $200,000 in the income statement, this translates to $200,000 times 1 million or $200 billion. This is better than showing 9 zeros after 200 in the income statement. The top line in an income statement is normally identified as sales, net sales, or revenue. This is the amount of money taken in by the company when it sells its product, such as computers, phones, etc. in this case. Cost of sales, also known as cost of revenue or cost of goods sold, is how much it costs a company to make its products. Gross margin or gross profit is the amount of money taken in by the company, minus its cost of sales. Gross margin is designed to let you know if the product is profitable on its own without the distortion of other expenses such as marketing costs, research and development costs, etc. Gross margin is sometimes expressed as a percentage of cost of sales. Operating expenses are expenses associated with selling and marketing the company's products. It also includes research and development expenses and depreciation and amortization expenses related to buildings and equipment. Operating income is equal to the gross margin minus operating expenses. It reflects the company's income before considering miscellaneous expenses and income such as interest on its debt, interest earned on its investments, taxes it paid, etc. Other income and expenses is for miscellaneous income and expenses. For example, it may include profit the company made for selling one of its buildings, interest earned on investments, interest owed for its debt, and tax-related expenses. These combined income and expenses could end up being positive or negative. Net income or net earnings line is the amount that is left when the company adds up all the money it takes in and subtracts all its expenses. This is equal to operating income adjusted for other income and expenses. Basic number of shares outstanding is the average number of shares outstanding during the company's fiscal year. Note that this figure must be multiplied by 1 million since the unit of the table is in millions. Therefore, the average number of Apple's shares in the hands of investors in 2023 was about 15.74 billion shares. Basic earnings per share, also known as earnings per share or EPS, is an important measure of a company's profitability, which reflects net income divided by shares outstanding. In a way, it reflects how much money the company is making for each shareholder. In 2023, the EPS for Apple was $6.16, calculated by dividing $97 billion of net income by 15.74 billion shares. The rest of this video will go through some of the things revealed by the income statement. The income statement can reveal a company's profit margin, which is how much profit a company makes in relation to its sales. There are 3 general measures of a company's profit margin. 1. The gross profit margin. 2. Operating margin. And 3. Net profit margin. Before describing each of these company profit margins, I just want to remind you about a couple of important principles in using any measurements to determine the financial health of a company. 1. What matters the most is how financial measures change over time. For example, you must consider if the financial measure is improving or deteriorating over time. You must also look at the volatility of that measure. In general, volatility is not a good thing for beginning investors. 2. Another thing that matters is whether the level of the financial measure and its trend for any particular company is in line with that of another company in the same industry. So, if you are only interested in investing in an airline, you should not be comparing the profitability of that airline to the profitability of a company that makes furniture. Some financial portals will do the calculations of a company's profit margin for you. Stockanalysis.com already does such calculations, so you don't have to. But even if you had to do the calculations yourself, the equations are easy to use. Here is how to find the 3 profit margin calculations from the Stockanalysis.com financial portal. I will use Apple's income statement for an example. Here, I've entered AAPL and dialog box of the website. Then after choosing Financials in the main menu and Income in the sub-menu, the income statement is shown on the screen. Towards the bottom of the income statement, you will see the profit margin measures. We use the term gross profit margin to indicate gross margin expressed as a percentage of revenue or sales. It's the portion of business revenue left over after you subtract direct costs, such as labor and raw materials. You should be aware that in some financial portals, gross margin is already expressed as a percentage of revenue or sales, instead of in dollar terms. Gross profit margin can vary significantly depending on the industry in question. For example, industries that involve high labor and material costs will have low gross margins since cost of sales will be extremely high. On the other hand, industries that rely more on research and development, which are expenses not typically included in cost of sales, have higher gross profit margins. This is why you must always compare financial results between companies in the same industry. Gross profit margin tells you if a company is making money on each unit sold after subtracting labor, materials, and other costs of production. However, operating profit margin tells you if the company is making money after it has additionally also paid the rent and utilities, marketing and sales staff and administration costs, as well as depreciation of plant and equipment. Operating profit margin is operation income divided by revenue or sales. Net profit margin gauges a company's overall financial health. It is the ratio of net income or net earnings divided by revenue or sales. Simply put, it is a company's after-tax profit generated by each sales dollar. Please subscribe to our YouTube channel and visit our website, teamvestor.com.